Coming up in today's episode, stocks fall as Powell says the Fed's not done raising rates. Tesla stock falls the most in 2 months. California is on the doorstep of recession. Commodities rip higher. Intel falls 6%. And Bitcoin jumps above $30,000 a coin. Welcome back to Click Capital, everybody. And a bit of a reversal of the trend we've been seeing over the last month or so, with tech really underperforming today, especially in the semis and mega cap tech, and the hardware side of the economy doing a lot better. Energy, utilities, industrials, and consumer defensives. And we can see that in the performance of the indices today. We've got the SP500 equal weight basically unchanged, just down a little bit. Mid caps as well, basically flat, just off a little bit. Same with smalls, and the Dow just down 0.3%. And then we've got the NASDAQ down 1.3%. And some of the mega cap techs could be putting in a technical reversal formation, which I'll get into a bit more later on in the charts. And so no real surprise out today from Jay Powell. Pretty much as expected. Like I was saying yesterday, he was going to reiterate his hawkish tone and just keep reminding everyone that inflation is still well above target and they need to keep hiking rates. He went on to say nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. He said a big majority believes they will raise rates twice this year. He said that's a pretty good guess of what will happen if the economy performs as expected. And we also had former Fed Governor Lawrence Lindsay say the Fed will keep raising interest rates until they reach 6% in 2024. And he went on to make another good point, which I agree in as well. Until the markets say ouch, the Fed has not likely done its job. And after shares of Tesla have been on an absolute rip the last month, on the back of news that Ford, GM, and just Rivian yesterday partnered with Tesla to allow drivers to use their supercharger network, which was pretty good reason for the market to get excited. I mean, electric vehicles are the future, and Tesla pretty much owns the infrastructure for all of that. So it's not surprising to see the stock have a pullback today. Barclays did downgrade the stock, and we can see on the chart how extended we got. And we put in a big bearish engulfing candle today on huge volume, 210 million shares. And the question is this the start of a bigger pullback? As we got some similar price action in some of the other mega cap tech stocks, which I'll get into a bit later. And we've got some indicators that California is right on the verge of a recession. And that could be significant because California is the largest contributor to the GDP of the United States and almost 50% bigger than the next largest state of Texas. And that's because California's unemployment rate increased from 3.83% in August 2022 to 4.5% in May. And that means California's 3-month moving average rose 0.63 percentage points relative to its low in the past year, putting the state in or near recession territory according to the well-regarded SAM rule. And we can see that in this chart here. There's the trigger for that rule to kick in, and we've just gone above that. And that's similar to the pattern I found with the overall national unemployment rate, which is currently at 3.7%. And historically, when that comes off a real low and curls up above this yellow line here, which is the 20-month moving average, we pretty much always go into a recession. And we can see now the national unemployment rate at 3.7% is right at that 20-month moving average of 3.7%. So I'll be really watching this number next month as we get unemployment on the first Friday of every month. If we get a 3.8 or 3.9% reading on that, that could mean we are right on the doorstep of the nationwide recession, and the stock market will just have to price that in. We also had oil and other commodities, especially agricultural commodities as well, put in a good rally today on the back of upbeat, optimistic comments from Chinese officials and look to potentially do a stimulus program soon. And as the world's largest consumer of commodities, that helped prices today. We've got the main commodity index tracking fund, DBC, up 1.46%, finishing at highs. And there's crude now back above its 50-day VWAP at $72.50 a barrel. We've had nice bounces recently in natty gas. Copper's in a short-term uptrend. Agricultural commodities absolutely ripping this year, with the standouts being wheat and sugar. Uranium's still doing well, just having a little pullback. And another pop-up in lumber after we got the surprise housing starts numbers yesterday. The only one contrasting that are the precious metals, and here's gold just kind of waning a little bit as the market still remains a bit undecided on the direction of gold. Remember, we almost hit all-time highs at $2,089 an ounce back in early May, just came $4 short of those all-time highs. Then we've pulled back a bit since then. Now to take you out to the weekly chart, we've just done a bullish 7 count, and I wouldn't be surprised if we come back up and take out those all-time highs in the near future. We do still have sticky inflation and a few storm clouds on the economic horizon as well, which could all cause a lot of investors to flock to the safety of gold. And historically speaking, investors overall have low allocations to gold as it currently stands. And the market didn't like new plans out from Intel today, telling investors they plan to become a foundry competing with Taiwan semiconductor manufacturing. And they've been trying to turn this thing around for a while now. Ever since NVDA took the leadership position from them a year or two back, the stock price has been languishing a lot, and investors have been looking to the leadership for what their plans are going forward. And they didn't like what they heard today. You can see the stock off pretty hard here, finishing near lows, down 6%, although that did come from overbought levels we were at a few days ago. We had Bitcoin rip up higher today, above 30,000 a coin, and a bit of a delayed reaction to the news we had out last week that BlackRock filed an application with the SEC for the first US spot Bitcoin ETF, and that's created a flurry of similar applications from rival issuers and speculation the asset manager has key insights that will lead to approval of its application. That's exactly what I said last week as I was short Coinbase and then saw this news come out after hours and immediately exited my Coinbase court as I shared with you guys on that day's video. And it caught me by surprise because BlackRock, the world's largest asset manager, wouldn't just file for this only to be denied and look silly. I think they expect it to go through. And again, it was just confusing because the SEC is suing Coinbase, and that's who BlackRock is partnering with to be the custodian of the spot Bitcoin assets. And so we got that news back here on the 16th of June of BlackRock filing for that new Bitcoin ETF. And it was a bit of a muted reaction. We're up almost 3%. I thought it was going to rip more, but it looks like the last couple of days it's really kicked. Actually got up to almost 31,000 a coin earlier today. And I'll just take you out to a weekly chart. We are at this resistance zone on Bitcoin now. It struggled to get above 30,000 a coin back in mid-April. So we'll see if it get above this now or it'll reject off it again. And there's a look at Coinbase shares. Not performing as well as the price of Bitcoin. And it'll just be interesting to see how this story unfolds, whether the SEC does indeed approve BlackRock to proceed with the first spot Bitcoin ETF in the States. And so not much out in economic data today. We just had Powell talk, a few other Fed speakers, and that will continue on to tomorrow where we've got weekly jobless claims and existing home sales, and into Friday with the PMIs. Fed Fund futures pricing in 3/4 chance we're going to get a hike in July. Fear and greed index still stubbornly high, and that's because the options market is still loading up on calls, 56% of them today at a 37 million contracts. An interesting dynamic in the options market of Tesla. So this is a look at the volatility skew, and that's basically the implied volatility of puts minus calls. And typically there'll always be a positive skew because puts are typically always more expensive to buy in terms of applied volatility versus calls, because typically stocks can fall a lot more and a lot quicker than what they rise. And recently that skew's been negative, so the implied volatility on calls has been more expensive than puts in Tesla. And typically you only see that in stocks with really high short interest or other special situations, maybe a biotech or something about to release results. But for a really large company like Tesla that doesn't have a huge short interest, option dealers were demanding more to sell call contracts than they were for puts. They were much more worried about the upside, thinking there could be a much more of a squeeze ahead. And so while the skew pulled back a little bit here today, we're still in negative territory. And we saw a similar dynamic in NVDA shares as well. And this is the skew of the 25 delta puts minus the 25 delta calls. And so just recently on NVIDIA, the calls are about 6 points more expensive than the puts. So that's approaching zero. And so option dealers are still a little bit worried of a further squeeze higher. Dark pool buyers pulled back a little bit today, but still in bullish territory at 51% on the DIX. And corporate insiders selling stocks still easily eclipsed purchases more than 3-1 yesterday. And we've got another NVIDIA corporate insider offloading a large amount of stock. This one, the biggest sale since we had earnings back on the 25th of May. We had director Mark Stevens sell $51.1 million worth of stock at $4.31 a share. And ever since earnings, we've had insiders sell about $200 million worth of stock. And I'm sure CEO Jensen Huang is next up, and he'll probably offload $150 million worth of stock pretty shortly, in my opinion. And we can see that in the chart here, all the corporate insiders offloading into the rip. And dark pool traders still with their record net short position in NVIDIA as well, to the tune of $20.7 billion. Okay, back to the charts, and a bit of bearish breadth across global equity indices out there. There's the TSX falling over again. Still got the FTSE pulling back. The DAX sitting right at the 50-day. The Nikkei looks to be stalling out a little bit after ripping this last month or so. The Aussie putting in a bearish 7 count, and the China 50 slipping a little bit further. Volatility just seems asleep at the wheel still, doesn't matter with the market pulling back, we still had the VIX drop down to 13.1. And the VVIX, which can be a little bit of a leading indicator, hasn't dropped as low, still holding up a bit there. Still got bond market volatility near record highs relative to stock market volatility. We've had the skew index pull back quite a bit here the last week, now down to 133. And breadth still holding up somewhat, 58% of stocks above their long-term average. But we're no longer breaking out with the amount of stocks making new highs. A little bit of a pullback here in the growth versus defensive sectors and the high beta stuff coming off versus low volatility. Growth versus value spread, it's been stalling out for a few weeks. We've got a bit of bearish divergence building here on the DSI. Small caps versus bigs just put in a bullish 7 count. Looking to hold the 50-day VWAP here. There's a spread of commodities versus stocks perking back up above the 50. 10-year yield still flat at 372. And even though we're seeing yields rise and stay flat, TLT's been holding up pretty well with a solid close above the 50 today. Dollar back down in its major support zone at 101.60. And there's another look at Bitcoin as I speak, trading right around 30,000 a coin. It has ripped up on volume here, but we are coming to this overbought levels. We can see that with the price above the buy-sell band. We're in this resistance zone. The DSI is getting to an overbought level at 13, and we can see a bit of bearish seasonality as well over the next 10 days. So typically over the next 10 days, historically speaking, Bitcoin's fallen 3.77%. So we'll have to see whether this news of BlackRock and a few others trying to start a spot Bitcoin ETF, that would physically create more demand for Bitcoin as it legitimizes it a bit more and people can invest into it. And it's just an overall positive signal if the SEC does approve spot Bitcoin ETF, even though they're suing Binance and Coinbase. It's a bit weird and confusing. However, fundamentally speaking, that is a positive for Bitcoin, but we're at a big key level here of 30,000. So we'll just have to see whether the market can take that out with conviction, or will it reject off this level again like we did in mid-April. And there's a look at the stock sectors there today. With the winner today being the ETF, I let you guys know yesterday that I invested in. And that's the US Cannabis ETF, MSOS. Got up a little bit here today on volume, just sitting right at its 50-day VWAP, and up a little bit more in after hours as I speak. And like I said, I'm speculating that the Safe Banking Act has a better chance to go through this time than ever before. And that's representing what I think to be an asymmetrical bet, where in my mind, I'm risking about half a point, maybe to a full point. I was filled at 548 on the open yesterday. Now, if a Safe Banking Act goes through, then it hits the headlines all over the media. Everyone's talking about it again. I think this thing could easily pop up back over $10 a unit and may make a good investment over the next year or two as we go into the election next year. And one of Biden's campaign promises was going to legalize cannabis at the federal level, which would allow the banks to deal with all the companies, legitimize the industry, and should open the door for institutional investment into the stocks of cannabis companies. And since we're at rock bottom prices here, that's why I think it is a good trade. And I just think it's the right thing for the government to do. You look at all the data from countries and states that have legalized it. You've seen decreases in the amount of opiate overdoses and gives a pathway for opiate users, alcoholics, and other people struggling with substances to get off those substances with cannabis. And plus, regardless, people are going to use it, so you might as well regulate it. And it helps create businesses, jobs, and tax revenue. And all those things have been proven. So I think it's highly likely that the federal government does legalize it, hopefully at some point in the next couple of months or maybe later this year. So stick with me and I'll let you know how this trade unfolds over the next couple of months. Let's look at the price action in semiconductor ETF. See, we fell a little bit here today, a little bit of a bearish divergence. And with Tesla falling today, that brought down ARK as well, off 3.6%. And other areas of the market that have been enjoying a bit of pretty good run of late, like the IPO ETF came off a bit today. So a little bit of a pullback in the clean energy ETF, which got a bit overbought last week. And doing better today was retail, home builders, and energy stocks. There's aerospace and defense stocks approaching all-time highs, and a little bit better performance in the defensive areas of the market, like utilities. There's another quick look at Tesla. We're trading down after hours as I speak to 256 a share. NVDA has put in a bearish 7 count. We do have these bearish divergences. And like I said, insiders and dark pools are selling into this strength. But we've still got a lot of retail and option traders loading into call options on this and expecting further upside. Same with a lot of Wall Street analysts calling for $500 a share. There's a look at Apple and Microsoft down a little bit, and Google as well, a bit of a bearish divergence. AMD down 5.7% on volume, almost at its 50-day, and Netflix as well. So again, we've got a bit of a reversal formation in all the big guys. We just still need a bit more of a follow-through to be able to call this like a correction or the start of a bigger pullback or something like that. And the smaller, more sensitive high beta stocks in the AI space, like C3 AI pulled back 9.6% today. We did get super overbought up here and bearish divergences as well. well, as I let you guys know. Active today, we had RV maker Winnebago come out with earnings, and although they did beat, market didn't like their guidance, and the RV industry has been weak with sales down 50% this year. Same with Winnebago, their revenue fell over 53%. We gapped down, but it looked like the market dip bought it a bit. A little bit of a rip up, and Dollar Tree reiterated their upcoming quarterly guidance. Let's look at FedEx after we had earnings yesterday, fell 2.5%. One of the leading stocks in the market this year, Super Microcomputer, continues its pullback. There's a look at Virgin Galactic. After we got that news Friday, they're going to start commercial space flights. Next month, we got a real good pop-up, but now we're looking a little technically overbought here. There's a look at Royal Caribbean, ticking up a little higher today, and I'll just take you out to a weekly chart. We're currently putting in at a bearish 11 count on the weekly chart, and the last time we put in an 11 count on the weekly chart was just before COVID hit, back in early 2020. And so this is in a big resistance area here at the mid-90s. We'll see whether we can close out the week above this level, above 98 towards 100, and make a further assessment there. And the regional banks continue to trade a little soft along with the big guys as well. And there's a look at our SP 500 oscillator, currently at a 59 handle, only pulled back a little bit, indicating the market's still really technically overbought in the short term. And I've used this recent dip in the market to trim a bit of my shorts, taking my overall net short position down to 40%. And so there's still quite a bit of momentum in this market, especially in the NASDAQ. And even though we're rejected off this resistance level here on the NASDAQ today, and like I showed you the potential start of a few reversal patterns in the mega cap techs, it's still too early to say whether this is the start of a major pullback or correction. And the equal weight indices still look pretty flat as well. So for now, I still have a slight to moderate bearish tilt, but just getting the portfolio back down to market neutral, as it's kind of hard to say with conviction either way. Exactly where we're at in the market right now, we do have a few mixed signals with the improving breadth in the long term. And so short term, we're really technically stretched and due for a pullback. But with this strength of late in the medium term, that could be a positive thing and a bit of a tailwind for the market. So I guess the next big thing is to see how the market really reacts to the probable rate hike that we're going to get next month, especially tech stocks, which have been on an absolute rip and typically don't like higher rates. Other than that, I'm just keeping the portfolio diversified and very selective in my longs and shorts. And we'll continue to play it day by day, week by week. That's all for today, guys. Thanks very much for sticking with me and hitting that like button. And hope to see you again tomorrow. Cheers.